Hi, and welcome to this week's look at the major news stories affecting the market so far. Well, we're going to start with the Nikkei. That's had a pretty good last week or so. We're talking about record highs there. Conversely, we're going to talk, though, about the yen against the dollar and what's been going on with the yen and its relative weakness at the moment. Thirdly, we'll take a look at cable. So that's the Great British Pound against US dollar. And dollar CAD, a little bit of technical analysis on what's happening with those pairs. And we'll finish off with a little bit of analysis of the current gold price. So to start with then, the Nikkei has set an historical high, but is there a possibility of a correction on the horizon? Well, last Thursday stroke Friday, depending on which time zone you're in, the Nikkei hit an all-time high, circa 41,100. Well, why was that? Well, we've got a weak yen, as I've hinted at just in that introduction, which is supporting Japanese exporters. The profits, obviously, they're earning abroad are then converted into yen. Yen's pretty low, so it bolsters their profits somewhat. Top of that, we're also seeing in Japan quite a demand for Japanese companies with decent dividend-paying shares. For example, Daikin Industries air conditioning manufacturing firm was up 2.82% last week. We take a look at the chart, and what does that show us? Well, the signals are indicating that there is a possible correction due. Now, why is that? Well, the price is near the upper border of the ascending channel. That upper border could well become resistance. And we're also seeing some long upper shadows forming on Wednesday's candles, which is a sign of selling pressure. Clear bit of difficulty you can see in that chart as well, of the price staying above the 41,000 level. Now, if a correction does occur, we may get support from the lower boundary of the steeper ascending channel, which is shown in purple, which runs roughly in the area of the Fibonacci retracement level, 50% of the A to B movement. And obviously we've also got a psychological level of 40,000 in play. Now, bearish sentiment for the Nikkei could be triggered by decisions from the Bank of Japan and the Ministry of Finance, who are concerned about the weakness of the Japanese yen currently. We are talking, it's near a sort of a 30-plus year low. So there are quite a few factors in play there, but certainly the Nikkei having a good last week or so. Okay, we're going to follow that up now with a closer look at the Japanese yen, in particular against the US dollar. As we've said, quite a lot of weakness in the yen currently, but at the moment seems to be a little bit of consolidation ahead of news coming out of the US. So Tuesday saw inflation data come out in Japan. The actual core CPI figure was 2.3% against a forecast of 2.5%. Last month we had a figure of 2.6%, and a year ago we were talking about 3%. So Japanese inflation coming down nicely. Also got the fact that the dollar yen has increased more than 7% this year, and as mentioned in the previous video, the yen is at a multi-year low, circa 30 plus years. Now, Nasatu Kanda, Deputy Finance Minister, warns it's not due to fundamentals, that's the weakness in the yen, but caused by speculation, and that authorities would take appropriate measures against excessive fluctuations in the value of the yen. However, neither the verbal intervention or that core CPI data really moved the market, and that is because we're waiting for the core PCE price index and the Fed chairman's speech from the US on Friday. That is going to be quite a major driver for this market. From a technical analysis perspective or point of view, this sort of little lull is quite natural as the price is near the median line of the ascending channel that we can see in blue on the chart, and the market perhaps cooling slightly after the RSI was quite clearly overbought last week. So these factors in play all contributing to perhaps a small period of consolidation at the moment. So I say Friday could be key because we've got the data and the speech, which are going to be main drivers. Be aware volatility could possibly be higher than normal, as quite a few countries in the world have a public holiday on Friday. That's potentially fewer market participants, so volatility could become more of a factor here, so don't forget your risk management techniques. Now, we could see price support at the following sort of levels if we do see a decrease in the value further. So we could see support at the lower line of the border of that ascending channel. We've got the psychological level of 150 yen to the US dollar, and the recent low, which is around the 150.3 yen to the US dollar. So that support could come into play as well. Now, if we do see an increase in the market, sentiment will be influenced by the Bank of Japan's reaction to an excessively weak yen. And this time, any intervention may not just be verbal. So it's going to be a choppy week, that's for sure, once we get those figures. Don't forget your mismanagement techniques and keep your eyes and ears open for what's being said, as well as any core figures that come out. Sticking with currencies, let's take a little bit of a look at what's been happening in major dollar pairs. And we've got the Great British Pound against the US dollar is diving, whilst dollar against the Canadian dollar is gaining some bullish pace. So cable, Great British Pound against the US dollar. Let's take a look at an hourly chart here, and that shows that we started a fresh decline from the 1.2800 zone. In fact, traded below 1.2690, found a little bit of support and moved into a bearish zone. We also then traded below 1.2665 and the 50-hour simple moving average. Bulls started to appear around the 1.2580 level. We saw a low, as you can see there, around about 1.2575. Then we climbed back above 1.2600. So we've got a little bit of support sitting there at 1.2600, and then we're looking at 1.2575. But past there, we could be looking around the 1.2500 mark again. Resistance, well, we're looking around 1.2665 for the first sort of major point of resistance. We've got a Fibonacci retracement at 1.2690. Now, a close above here could spark a steady upward move. Major resistance then to be found at 1.2750 and onwards and upwards to 1.2800. So a bit choppy again. As I say, we do have public holidays coming up. We have got data coming out. So risk management, stop losses, etc. could be key moving forward towards the end of this week and into the start of next week. Flip over now to US dollar against the Canadian dollar. Again, we're looking at an hourly chart here. And we see some strong support base above 1.3445. And the dollar started a fresh increase above the resistance at 1.3515. Now, a break above the major bearish line at 1.3575 is going to be quite important. Initial resistance sitting at 1.3610. And if we break there, then we're looking at 1.3640. And a close above that level could well lead us up to 1.370. Now, what about support? Well, the 50-hour simple moving average and the 1.3575 level are key. After that, we're looking towards 1.3555. After that, we're looking at next major support would be around the 1.3515. That goes downwards towards 1.3455 and then 1.3400. So not really clear what's going to happen then. Again, figures, drivers, speeches, all going to come out this week, potentially during a period of lower volume. So do be careful. Okay, we're going to finish off this week and we're going to take a look at the gold price. And is there an important bearish pattern forming? March the 21st, that's last week, we saw a record high over $2,200 per troy ounce. What were the drivers behind that? Well, they include many factors, of course. But Goldman Sachs are saying that we could see a return of 15% in 2024 for commodities as US interest rates decrease. And obviously we've got increased and further geopolitical threats. Anything coming out around that sort of area is going to have an impact, and increasing US national debts. So been on a bit of an uptrend, not a massive surprise with everything that's going on, but there are some arguments for a correction. If you take a look at the chart, the price is an upward trend, showing that the blue channel, and that started back in 2023. In March, the price reached the upper boundary of that channel, and that acted very much as resistance. We're also seeing some long upper shadows forming on the candles above a price of about 21.80, which could well indicate that sellers could be taking profits, for example, or sellers coming into the market to try and push the price back down. The RSI indicator is giving us a clear indication of bearish divergence, and we're seeing the sort of there we can just see the formation of a bearish head and shoulders pattern. The price is being held by the trend line that we can see in orange, which is also the neck of that head and shoulders pattern I mentioned. Thus, it's possible that the bull's inability to push off that orange line could well lead to a bit of a correction. A bearish breakdown of said orange line would be quite key there, as would be a test of the breakdown levels. Now, if the above does happen, sentiment could change quite dramatically, which would open the prospect of a correction within that large blue channel that we're seeing, and possibly retreating and testing that psychological level of 2,100. Gold always been a bit of a safe haven, and obviously we can see there why, with everything that's been going on in the last few months, buyers, investors have been attracted to it. But record highs are often followed by a correction, not every time. So keep your eye on the market. Don't forget your risk management techniques, and we wish you luck with your trading in the week ahead. Bye for now.